Afternoon, everyone. Hope you can hear me all right. Fine, thanks, Anne-Marie. So wait a couple of minutes, if you don't mind, till 4 o'clock, and then we can start. 4 o'clock, habit there, sorry, 3 o'clock. Amazing, eh? We get the habit.
Other people that I remember watching.
Yeah, just sort of mention, you can put the chat line or interact verbally, but not, it's nothing to do with the trade. You have to mute. I understand what you're saying. Sorry, I just had to mute you all, guys. But if you do want to chit chat with me or the trade room, interact interact with the actual trading side of it. So I'm trying to do this at the same time. Multitasking, I'm not that great at. Yeah, then I'll unmute for you. But people forget they're unmuted, and it obviously can interfere with the TR. A few more seconds and we can start. Let a few more guys in. Okay, it's 3 o'clock. I'll have to stop occasionally as new guys come in. Just all coming in now. Maybe give another few seconds. We've got half an hour till the release, so no need to panic. But we've got pen and paper handy, so you get. I can't spend half an hour repeating myself. If you don't get it, don't do it. That's bottom line. Okay, if you or ask and then we'll repeat. But if you still don't understand, it's getting close to past. I'd have to stop. We've got to be rock and roll ready. We've got to be on it, pen and paper handy. Okay. Still a few people coming in. It's a pity, but there's an admit thing. Hey, consider the company, and just get on with it. Keep having to stop to do the admit. But anyway, Zoom rules are Zoom rules. Okay, right. As we know, we're doing a special session here for the Consumer Price Index. The guys were in the trading room before. No, I'm not going to allow recording. You can't. Recordings on the YouTube, on the social media, on the portal. I need to concentrate on this actually. Yeah. Where are we now? Yeah. Okay. So the guys in the trading room sorry. The guys in the trading on a regular basis will know the mechanics of this. We discussed it yesterday and this morning. And I know if one or two guys on here actually did it. Across my screen getting sonic way here. Okay, right. How has the mechanics have done it? Guy wants meeting logins now. I haven't got time for this. Sorry about getting this out. People are coming in here. I've got stuff to do. We should have the meeting logins and where to go. When they're explaining where the trading room is, everything is explained to them. They should be able to contact the account manager and they'll help out. It's all flying at the moment, and can't help but think actually. That's fine. Right. Okay, where was I? Yeah. Okay, so we've got a few minutes to past. All right. So, like I said, those who don't understand mechanics, that's fair enough. They'll already know that. There'll be a few guys who don't. So, what we're going to do is we're going to do what we call a straddle trade for the CPI. Now, if you've done it before and you like Nasdaq or you like I don't know, whatever you like, gold, it's up to you. I'm going to do it with the euro dollar today. Now, one of the only things you've got to remember, and Clinton included, whether you've got Nasdaq, whether you micro or the normal, you've quite a wide spread. So you've got to take that into account on the movement. Okay, the euro dollar is dollar related, clearly, number one. Number two, as you can see, the spread's pretty tight. So that's a good sign as well. I'm not going to explain what the spread is. I'm sure you all know now. And don't forget, the euro is the base currency. So if the dollar comes out strengthening, it'll go down. If the dollar's weak, it'll go up because it's about the euro being the other side of the seesaw. Now, everyone speculates what do you think. I think red will come up on the casino and black comes out. I don't know. So it's not just what the figures are, how the reaction is to it. Now, the major likelihood is if the CPI figures come out above expectation, then it's perceived as inflationary, and the traders, the big boys, pro trading, will expect then interest rates increased and the dollar strengthening. All these guys coming in, dollar strengthening helps everyone's on time. What's what I'm doing? Right. Okay. The expected dollar. Sorry, this is. I'll have to stop it after a few minutes because I can't explain what's going on. What am I doing in the middle? There we are. Okay, maybe it's good to host and let them all in. I don't know. But anyway, whatever. Yeah, so I completely lose the thread in this. On my house and that. So I'll let them in. Where the hell was I? Okay, yeah. So if the CPI, if it's below expectations, they'll see inflation getting more under control. So they expect a weaker dollar because then they'll perceive interest rates will be slowed down in their increase going forward. You should all know about that by now, so we'll get too many more details. What we're after now is the mechanics of the straddle trade advantage of the unknown. Now, I want to spell out something here. It will be very large orders being put in before the market, which some will be triggered and some might not. And there'll be a lot of guys exiting pretty quickly. So we've got to watch out for that seesaw effect. So what we're going to do now is we're going to put, not at this moment, for goodness sake, listen, if you don't get this, don't do it, because you're going to get yourself caught up in knots. Put the trade in 5 minutes or less before past, but for goodness sake, have it in by past, or you'll get caught with your trousers down. It's always a risk, there's no guarantees, but it can be profitable. Okay, now if it comes out expected, you might get a bit of a whiplash effect. You won't know whether to go up or down. So bear that in mind. So when you put the trade in, what you're going to be doing is you're going to put a trade above the market. I'm suggesting 15 pips. Now, at 62 at the moment, ignore the point. We're after pips here. It's 15 pips above on the buy stop, 15 pips below on the sell stop. Right, that's the pending order. Now, you can't do it now because it's moving around still. So depending on what those figures are, 2 or 3, 4 minutes before past. I hope you've all got that. Now, it's quite simple to do it. Let's go to the euro dollar. Same principle, whatever you're using. I'm using that for everybody. We'll use another one. Look, short gold or dollar. I mean, have it, not the GBP, JPY. Yeah, if you've got to use it, it's going to be quick. You've got to employ some common sense here. I can't explain it all. Then you must come next time into the PR. We'll go into more detail. Right, where are we now? Okay, what you do is you click on the new order, you go to the pending order. So they're all coming late, they're going to miss this. Can't do everything. Okay, now the next thing is you've got to go to, we'll start off with the buy stop, not buy limit, buy stop. Now, what volume are you going to put in? People say, what volume? I haven't a clue. I don't know how much money you got, what you're prepared to risk, what your situation is. So you've got to know to work out what specific volume you're going to put in. So you work it out, whether it's 3, 4, 5 micros a minute, I don't know. So work out the amount you want to put in there, and yeah. So right, getting quite a few here. It's good news. Yeah. So you put in the volume which you're comfortable with. If you don't know that, well, you've got to find that out. I haven't got time to go into explanation of each individual what budget you're going to work on. So by this stage of the game, you should know what your pair to risk and the volumes, etc. You put your volumes in, it doesn't matter. I'll put 0.05, 0.1, it doesn't matter. Well, it does matter as long as you put in the volumes for the rest of your account. This is not a sell or a buy trade. This is a straddle trade, remember. Right. So you put in the buy stop, the volumes you've chosen the correct ones. Don't put the stop loss at TP. Don't worry about it. Put in the price. Now, we don't know what it's going to be just before half past. So we're going to have to use an example here. It's 15 pips above. So let's pretend it's 60 and sticks there. So you put in 1.07. Sorry. 1.07. Is that right? 75, yeah. Right, so 15 pips above the market, then you place the trade. Remember, it's not being filled, you're not in. You have a trade placed above the market. I repeat, not now. Do it the last 2-3 minutes before half past, because the market's still moving. So you put it 15 pips above the market, then you go and you put another order in, and you go to pending order, and then you put sell a stop, not buy limit, sell it, buy stop above, sell stop below. Again, if you don't know your pending orders, go to platform training and learn, etc. from here, but you've got to know the mechanics. Put the correct volume as your risk, whatever your volume is, and put below, not the buy, but the sell price. In this case, it's going to be 60, so it'll be 45. So you put in 1.0745, and then you place the sell, the buy, the sell stop. Okay. Now you've got an order above the market. You've got an order below the market. Now we're waiting for the release to come out. This is the important part. If it starts shooting up, for example, before you play around with stop loss or anything else, number one, you delete. Repeat, you delete the unfilled order. So it shoots up, you delete the sell stop. If it shoots down, you delete the buy stop, because you get what called whiplash. It might come down and suddenly shoot up again in both orders, and that's not going to help your cause at all. So before you get cute, it comes shoot down, quickly delete that one, and then follow it down. How far, how long to piece the string? This is what you use common sense and be on it. If there's a big difference, it might come off quite quickly. Some profit taking by the big boys, that those the high-speed trades might bounce up a bit. Some might not get filled, and because they're not filled, you might get upward movement before it comes down again. You might want to take profit. You might want to put if it's going down there, you might want to put a modification stop in at entry and see if it goes back down again and follow it down. Exit it or modify your stop as you know how. Of course, if it's the other way around and it goes up, then you do the other way around. I'm sorry, I'm getting a bit rattled with all these guys coming. I want them in there, but just keep straying off the concentration. We say 3 o'clock for a reason. It's now 10 past. You guys want to drive. So that's why I'm getting a bit rattled. Okay, right. So yeah, where was I? So I go to the mechanics again. You put a buy stop 15 pips above the buy price. You put a sell stop, pending order, 15 pips below the sell price, just before 3:30, because this is moving around, as you can see, right? When it goes in, remember, if the CPI figures are much higher, it'll be inflationary. I'm expecting a strengthening of the dollar. It'll come off because the euro is the base currency. If it's below expectation, depending on the gap, how much is below, the movement will be excessive. It's a lot below. The dollar will weaken quite a bit, so the euro will shoot up. So don't forget to close your unfilled order before you do anything else. Then move to the other one. And then if you're happy with the profit, take it. If you want to move a bit further to profit, you can take it. Put a stop loss in or modify it or whatever, you can take it. You've got to be on the ball and think for yourself on that one. Because each individual speed, amounts of money, and understand is different. So bear that in mind. Okay. So, sorry, all these guys coming in. So just run over. We've got a few more minutes left. Are we all on it? 1-5. Thank you, guys. 1-5. 15. 1-5. Okay. Can't pronounce Afrikaans. Or 50, I think it is. 15. Okay. Above and below. All right. 15 pips above and below. Right. I hope you all understand that. I'll go through it again. We've got some time. 15 pips pending order buy stop above the market. 15 pips below. If you're doing an indices, if it's the first time, don't. If you're more experienced to do it, you need a wider because the spread is higher. But if you've done it before and you happen to do it, you should know the score. You don't need me to point that out. Okay, so let's stick, if you're a first time, with a euro dollar. If you've done it before and you want to do gold, it's up to you. But let's just remember some new guys here, and we want to just get on the same page. So euro dollar, have it on the 15-minute, and then not right now, it's getting close to 25 past. We can start putting it in there. So at 15 pips above the buy price, ignore the point, 15 pips above that figure, and 15 pips below on the sell stop. And when the figures come in, depending on the movement, you close the unfilled opposite order number 1. Then you follow it up. If it's going up quickly, I've given an example, you got in here, I don't know, here for argument's sake, maybe you just get quickly put a bang, bang. If you're too slow on this, don't do it. You've got to be on it this time. There's no well, yeah, think about it, we'll get back to you. You've got to be on it. So what you do now is, sorry, what's this pending order thing coming up here? So what you do then is, if you got the time, you're on it, put your stop loss in at, if it's up or the other way around, obviously, to the break-even area in case you get a problem with the whiplash. Then you're covered, and then if it's going this direction, follow it up till either you stopped out, or you modified your stop, or you close it, or you part close it, run it. You've got 5 micros, you might want to part close 2 more till you're out. These are things you've got to know when you're trading. Okay, and that's why I'm getting quite agitated. People are trying to trade and have the slightest clue what they're doing. I'm trying to tighten up because I had some conversation with experienced guys, and they want this tightening up because, guys, you've got to do it, and I can only hold your hand so much. So you're going to have to part close and move on it, move the stop up, and even if you want to close, it's moving quickly. You can have it where you right click, have the close ready. You can click on the close immediately because this thing can run fast. If it's too fast for you, learn how it's done and see how it's done, and then you can have another batch next time. But it's no scratching your head, not too sure. This is my first time. I want to make a quick buck and not quite sure what's going on. Don't understand the mechanics. You'll probably end up not a happy situation. So I'm going to get around there. Well, which I want, and it's just clacking my ear a bit. But yeah, and the time is huge because it's coming up to past. So these are the guys to learn, and if you feel confident enough to do it. If the guys are successful, it's no good me saying we did well. I want the feedback for the guys did do it if they're successful, to actually tell the other guys in the chat line it works nicely, and that will send an incentive to learn their story, make the effort to get some knowledge so they can join us the next time at CPI and the non-farms. And we want to start increasing on that because there's far too many people trying to trade these sophisticated derivative markets without having the slightest clue what's going on, and it's coming back to bite. And quite frankly, it's not fair on them because it's not right. You know what I mean? No. Yeah, no, I don't know how to put it any simpler than that. You don't have a clue you're doing, don't do it. Yes. Right. Good. Okay, so right, so it's coming off a bit now. Just keep an eye on it. These are guys, high-speed traders getting in and out, not quite sure. Some are guessing, some guys are getting aggressive. They're not doing a straddle. They think it's going to come out where the dollar's going to be strong. So they're thinking, I'm going to take a gap on it to move in the market, might push up a bit. These are guys getting in a buy or sell trade, and they're taking a bit of a guess actually, because they think that way. We're not going to do that. We're going to do a buy-sell trade. So we're going to see what else gets triggered after the event. Are we all cool on that? Thank you, Gladys. We all cool on that, Fritz? Sorry, I'm making it changes. Nobody stopped because I mean, I keep it. If the Zoom had a thing with it accordingly without that racket in the background, it'd be more calm. But if you do those three and explain that racket, it's not easy. So yeah. So remember, if it does come in a big difference, it's going to be moving fast. if you can be on it, it's extremely quick, profitable, happy days. But if he's coming after, only put the sell in and have time for the buy. Well, if you're not on it, you can come back and bite. The time is to relax in when you practice time. When you're putting for the $1 million cut, then that's not the time to practice it. You've got to know what you're supposed to do. Okay, so any questions on that straddle trade? We've got a couple of minutes. I can explain again if you're not sure. No problem at all. So you don't be loud and answer. It's not your fault. But if you want to do it, great. Eugene, it's clear with you. I know it's clear with you, Farley. Talk about Fritz, I know that. Talk with the other guys who, battling on the mathematics side. Anybody out there like to do it because it can be very profitable? Want to go through the mechanics of it again? And by the way, if you do like it, do well. Suggest when you do the next one, farm the 3rd of March for the next CPI, try and be on time. It's clattering the first 18 minutes, people joining a little bit late. It's very difficult to explain for the guys who are on time. So it is important. Go again the order. I need to see something. Okay, 15, so now we've got a few minutes left. 15 pips above. So you obviously go to the new order and you put in the volume which you feel is comfortable with. Okay. And then you go to, first you go to pending order. We'll start off the buy stop, okay? And then you put in the volumes, which you're comfortable with, and then you put the price, you add 15 onto that figure and put it in there, right? Which in this case will be 1.0768. Okay, then you place the order. Then you do the other, again, go back, double click, go to market, go to the type, go to pending order, and this time you're going to do the sell stop. The sell stop, you put your volume in, obviously, and then you say, what's 15 below that? For that 55 minus 15 be 1.0740 or whatever it is. You do the maths on that one, and then you place the order. Right, in this case, that should be slightly low, moving around. 15 pip, 15 above, 15 below. Place the order, and you're in business. It'll sit there, and then half past, it'll come out. It'll either have a very little effect or have quite a lot. We have not the slightest clue. Never mind what do I think, it doesn't matter, irrelevant. What's the gold price in a year's time? It's irrelevant, I don't know. So if it screams up, which clearly, or down, you want it to scream the specific direction, screams down, get rid of your buy stop. Don't let it sit there, get rid of it. Then follow it down, either close it, part close it, put stop losses in, up to you to follow it down. If it goes up, obviously the other way around. It goes up, great. Get rid of this guy and then go in there. And it starts coming off quickly, you might want to get out. It starts going up a little bit more, very profitable. Get a stop in. You can either modify or just wait and hold to close the entire position. If you want to close part position, I'm not going to show you how to do that. I'm assuming you learned that in platform training. If you've got 6 micros, you want to close 3, let the rest run, close another one till they're all closed out, modify your stop. That's the sort of thing, to be on it. If you're not sure how to do that and it's shooting up, you're happy with the profit, you're getting nervous, close it. You won't get more. That's your choice. That's your decision. And when the market's moving that speed, you can all the clients different amounts of money. I can't sort of explain bit by bit. Guys coming in now, I'm going to be quite honest. I've only got a few minutes to explain. So if you come as late as this and want a full explanation, it's like coming in. Well, it's not for that, obviously. So that's how it works. So anybody else have any idea how that's working? Ask why not. You don't need to, because you can't have a stop loss. What's going to happen? It's not a normal trade. You only put the stop loss in afterwards. It doesn't know which way it's going to go shooting. You could get stop loss. If you put a stop loss in where it is, you get knocked out in the noise, going the wrong direction. So don't put the stop loss in. It's not a buy or sell trade. It's a straddle trade. So only put the stop loss in once you've cancelled the opted order. Put it in, hopefully at around about just above your entry part, and see how it moves. Okay, that's the point. Worried about whiplash. There's nothing risk-free. Everyone wants, but no one wants to give. You're not going to make a lot without some sort of risk. If you don't want to take a risk, put your money in the bank, get 5% per year. It doesn't beat inflation, but there's no risk. Well, it is. You're hemorrhaging money slowly. So there could be a whiplash. I haven't seen many, didn't say they won't happen. Now I said that. There's always Murphy's Law, you get the idea, but we shall see. So I'm just hoping that the figures are going to come out way different to the expected. Then you shouldn't get the whiplash, you should get some violent movements and you'll be taken in and hopefully make a quick profit. Okay. Yeah, I hear you, Mark, but don't get too technical. Okay, so are we cool with that, Gladys? Are we cool with that, guys? And you'll see what happens when it comes out. Okay, any questions? Well done, Eugene. That's doing it professionally. Well done. The theory actually is not difficult. It's when you've got real money, the emotions cloud the judgment. That's what makes it difficult. It's like like making a 4-foot putt for $1 million and a 4-foot putt just for fun. You get a 4-foot putt every time. Bung $1 million in it, you start shaking. That's the emotion that clouds the mind. That's why you need to be on it. Any of the newer guys? Ayanda, you're cool. Any questions on the newer guys? If you don't ask, you don't get. I'm tired of saying this. People don't ask, still don't know it, and then they wonder why. You're cool. Good. Interact. I'm getting more teachers as I get older. No, I'm not going to go. 3 minutes to go, 5 minutes to go, man. If you want to do go, that's your choice. No, if you can't understand what I'm talking about there, I'll do it. But yeah, you don't need an SL and TP on this one. All you do, because it'll be knocked in. If it's that quick on the whiplash, you'll be in both sides anyway, and you'll be edged. It's irrelevant. So don't worry, your TP and SL. Just put in the buy order, the seller as explained. If you're comfortable, if you're not, watch it and see how it done. So you'll be ready next time. We'll study up on it or whatever. And then you only put it in after we found the direction. We know which direction it's going to go. Last thing you want is a stop loss and you're kicked out and won and you're in a hedge trade. So you got to buy and sell in by mistake at the same time. You're hedged anyway, so it's irrelevant stop loss. Hope that makes sense. Like putting your money on red and black in the casino. No, you don't need a stop loss because you win on the black, you lose on the red. You win on the red, you lose on the black. You're hedged. Okay, right. I'm just wondering next time we maybe start a little bit earlier so people join a little bit later. We've still got plenty of time. Because I didn't want to rush it for the guys who've been getting it. Okay. 15. 15 above, 15, no stop loss. Forget the sodding stop loss. 50, if you don't understand what I'm saying, don't do it, Morris. You put a pending buy stop order 15 pips above the market, 15 pips below the market, no stop loss PP. Then you close the one that's not triggered once we get the news out. If that is not understood, don't do it. We'll do it next time. If you don't know, I mean, we had one guy says, there's a sell or a buy. Clearly had the clue what I was talking about, then we'll do it again next time. Not your fault, not blame anyone, but I don't want you starting to drive something you don't know how to drive it. Okay, if you haven't got the concept, watch and we'll learn it next time. And I'm thinking, I would suggest next time we open at 2:30, because clearly some of the games are so brand new, need a bit more time on it, and I'll be more relaxed, because then everybody will be in the room there, and we have this constant clatter. It's not your fault, I want you to come in here. It's a constant clatter that's putting me off. Okay, I'm just getting a bit agitated. It's not your fault, just check. It's where it is. You try and explain something important, it's going clack, 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 clack. It's like trying to speak on the phone, it's background noise, it's not easy. Okay, right, so no, come on, start looking, getting it in now. Okay, so start putting it in. You stop as you can put your buy stop on there at 1.07. What's that? 70. Buy stop 1.070. Place it. Put this up. The sell stop at 1.0740 and place it. Do it now. Got a couple of minutes to go. Place your printings now. It should slow down before the news comes out, so it won't jump around too much. But place them now. 1.0770 is your buy stop, pending buy stop. 1.0740. Never mind the last digit, is your sell stop and place it. Now you've got above and below the market and wait. And do not forget, close the order that's not filled. You must know what I'm talking about. The one that obviously not filled. I don't say any other than that. Are we good? Have you got your orders in? Because this is important, because you can be very profitable if you get it right. Good stuff. Be extremely profitable. That's why I feel, let's say you can handle a 3, you might even want to go for a 4 volume, slightly higher volume, because it'd be extremely profitable. And then as it shoots up, you're covered once you get your stop loss in on the correct side. You've got to understand these mechanics, guys. Please come to the trading if you don't. Don't try and trade if you don't know what you're doing. Come to the trading with 3, it's there. And guys are trying to trade like driving a car and don't know what's going on. It's dangerous. So there we are. So you can go in slightly bigger on this one because it can be profitable and you're covered as well. That's even better. Eugene, do you see what he said there? Excellent. Good point. So you fan out the other one and follow it. The last thing you want to do is a whiplash, you get caught within both sides. Give it another couple of minutes. After this is sorted out, I'm gonna copy and paste the economic calendar and the dollar index to save and minimize and keep an eye on. People jumping into trades just about the fundamentals coming out might get lucky, but they might get unlucky. So you've got to realize that. Just dodging around a bit. How long to go? A few seconds, I think. That's quite a bit. Another 40 seconds or so to go. Yes, Buckley. Can't do now. It's too late. There's another guy coming in just before you see again, they're not understanding, you see. It's like calling up a broker second for the non-farm payroll. That person shows you it doesn't matter. If you don't understand mechanics now, I didn't think about it. It's coming out in a few seconds. There you are. Right, close the opposite order. You're in. Close the opposite order because you might get a whiplash. So you'll be closing your buy stop now and following it down. What's it come down to? Start jumping around. Ooh, shit. Okay, watch it. If you haven't got time to put what you call it, you've got to be on this. Sorry, I'm losing now the speed of it. Modified. What do you call it? Modify to entry. Modify your stop loss to entry. Yeah. So what price you get in at 40 now there? So yeah, you should be in there. So maybe you can put, just in case it'll be a slight lot. That's going all right. Put your stop loss at 1.07. It's too close at entry, so don't put the stop loss in yet. Rather have it close to exit. It's a bit slow. I'll give you the figures now. Be on it and watch it. If it's too quick for you, don't do it. This is where you got to be on it. CPI is expected. CPI is expected. The year-on-year slightly better. That's why it's jumping around. Disappointed. CPI has come out as expected. So that might not work out. Close the opposite order in, etc. See what happens. Now you might have to get a stop loss in because it doesn't know what to do. Unfortunately, guys, it's come out as expected. That's why the market doesn't know what the hell's going on. We didn't know that. We know that now. So what are you getting at 40? Maybe put your stop in at 1.0765. There you are. 1.0765. Then you only got a 25 pip risk, which is peanuts in normal trading, and then you're covered. There will be a loss, you're covered. Okay. But the problem is it's come out as exactly as expected, and that's the disappointment. Okay. You need to have a discrepancy to get the major movements. I hope we're all on the same page here. Okay, looks like you get stopped out, but your opposite order's out anyway. Looks like getting it stopped out. It's the whiplash because it's expected. Remember I explained to the guys in the trading room, if it comes out expected, it could jump around any side. Okay, it's one of those things. Okay, sorry guys, didn't work out, but again, we don't know. As I mentioned, if it comes out expected, no one's going to know, so it's going to jump around. They've decided it's going to be a weaker dollar going forward. So maybe actually going long might be an idea, but it's jumping around too much, so don't do it. Okay, so if you've got the idea how it works, didn't work for you this time, it'll work next time. Because it doesn't always come out as expected. Often there's a big discrepancy, like the non-farms. You got the profit because you're on it, that's why. You got the profit, Fritz, well done. You were on it, that's the differential. But now don't even chase it now. Anything's going to happen, you come flying back. I don't know what's going to happen now. Nobody does. You'll suddenly change its mind. Remember, if it comes out expected, the buyers and sellers are scratching their head, didn't know what to make of it. So that's why it came off and going up. Don't try and get cute with it now. It's only 3 minutes after the release. But at least the guys who didn't do it and see it for the first time can see how important these fundamentals are and how it can actually react to it. If that had come out a lot lower than expected, the euro dollar would have gone shooting up because the dollar would have weakened and you'd be nice in a 50, 80 pip profit, literally in a minute or two. What a pleasure. If it can't way above, the opposite would have occurred and you might be in 80 pennies, you might be in 150. I've seen moving to 150 within a minute. All profit, what a pleasure. At the moment, your loss has been fairly small. You got the hell out of your short. Your long is closed. It turned out, look, your long had been there, it might have been okay, but it's still too risky to go that route. You don't want to work on luck. Luck would have followed you in this case, but you don't want to make a habit of relying on luck. But yeah, but see, I got to be on it. Some guys took a profit on that. Fantastic. That's what you want to look at, Tim. You've learned. So if you didn't go in because you weren't short, fantastic. You can see how important they are. Remind me in a minute or two, I'm going to copy and paste the economic fundamentals for you. Keep an eye on them because this is how it can affect them. CPI and the non-farms are very important. No, you can't, Gladys. Couldn't say no. No, settling down. Sorry, guys, don't chase it, guys. Don't chase it now. As I mentioned before, when it's as expected, the market doesn't know what to make of it. That's why it's jumping around. This is not guesswork. Oh, I'm going to make a quick buck. You've got to understand what's happening behind it. No, don't go in now. Let it settle down. Okay? And then you'll start to learn. Good stuff, NK. Good man. No, don't even think of trading the moment, guys. Don't even think about it. Rather than listen, learn. This is a learning curve for everyone. I'm actually a bit disappointed. I know it's going to be a big disparity. Don't mind either side. And then you'd see a massive profit made quickly and build the next burst. We'll do it again on the 3rd of March for non-farms. And yeah, the guys, hey, we did it last time from the non-farm last Friday. A lot of guys made good profit. Guys like Fritz were quick on it, grabbed it, and made some profit. Don't jump in now. We don't know it's going to be sustained. The market's got to settle down and think what's it want to do with it. You'll come back later on and fall off. Don't try and trade it now. So I'm a bit short because it's moving so quick. We've got to be on it. I will never ever again. What's that video? What will you never ever again? Okay, Ronald, fantastic. Do it next time. What do you mean by that? I'll never ever again. I don't quite know what you meant by that, but if you don't want to do it again, it's up to you. Yeah. Francois got out in a profit. Well done. Fantastic under. Good experience. Great MK. We'll see some of the other reactions to it. Trade during CPI. No, that's fine. It's up to you. It can be very profitable. Nothing's guaranteed. You know what I mean? I just went into the, I don't know, GBP USD, made a fortune. Next time, didn't go in, it went the wrong way. It happens. Do it next time. Join the trading room, guys. But okay, that was okay. But it's educational. That's fine, Eugene. Well, it's spiked because exactly as you know, Eugene came out as expected. So don't chase it now. It's indecisive because it came out as expected. I can't say it again. Surely you understand that now. That's the reason why. No, I've seen it faster than that, my friend. A lot faster than that. If that disparity had been great, let's say it was far bigger than CPI, the dollar would have strengthened, the euro would be flat. Euro would be down about 1.06 by now, and still moving, and vice versa. And you would have been big smile. I wouldn't give up on it yet, but okay, Fazi. Yeah, well, trust me, I've seen a lot more than that. It's only done, it's quite small actually. It's only done, what's it done? Only 80 pips. I've seen 150, I've seen more than that. And then it continues, even 15 minutes later, found direction continues. It's going to be very profitable if you get a disparity to the expected and the actual. Okay. Good stuff, Gertrude. And interesting, eh? We'll learn. What a wild ride, exactly, Eugene. Yeah, can be a lot of fun. Yeah, I'm suggesting next time we start at 2:30. The reason being is newer guys coming in and want to just refresh the memory, and I've got time to explain it properly without feeling a bit rushed and quite frankly rushing you guys. See what I said? Don't jump in now. The temptation's unreal, eh? Look, you wouldn't have been too happy. It's indecision because of the figures coming out as expected. That was the one thing I hope wouldn't happen, but I did all the guys in the TR that you've got to watch out for. That's why I pushed to get rid of the opposite order. You suddenly get a whiplash because it comes out as expected, then the market doesn't know what to make of it. And you clearly see that now. It's slightly worse on, I think it was year on year actually. Year on year is slightly better. Month on month is exactly the same according to mine. And yeah. I'm just going to copy and paste. Right, just give me a second, copy and paste. This is the economic calendar. So those who don't have it, please copy, paste and use it, minimize it, use it. People get it and they don't use it. I can only do so much, you know. You must use it. Here is the DXY. We always talk about that's the dollar index. Something else. Keep it, keep an eye on it. It affects the world, it's affected by America more than any other in the financial world anyway. Sit right back to square one. Look at that. That's the example I was talking about there. Thank you, Anne-Marie. Thanks for your support. You didn't. Well, I thought you were out. Well, it seems to be coming off a bit. So if you're still in it, you're quite lucky. I would put a stop loss, and if you're still in, I'll put your stop loss about somewhere in case. Make it about 1.0770. If you get stopped out, so be it. Because it doesn't know what to do. It could continue down, it could pop up anything. So get a stop loss, because I assume you are short the market, so put it above there. Sorry, sir, I'm in the trading room as we speak, so I'm sorry I can't chit chat now. Sorry about that. Okay, thanks, Ed. Bye. Just in the trading room, you start asking me questions. Yes, you. Okay, right. Yeah, where are we? Okay, yeah, you might get lucky on this. It seems to be going down for the moment, but don't get cute with it. Yeah, I think so. I think so. Yeah, I think so. I thought of 20, but it's you need slightly more if you're doing the NAS or something. Probably need a bit 25 or something like that. But yeah, you're a dollar. I think 15 will do. But I'll be here anyway if you change your mind, and you'll give the reason why. Okay. But don't give up, Nick. That's disappointing because exactly the same. I can't predict that. But believe me, Rio, yeah, if that was a big disparity, most of the time there is a disparity. Okay, then it can be very profitable. It can make up for all the losses and all the problems and everything you had in the previous few days. And it can, even if you made out a profitable week, and you can go out and in 5-10 minutes, you can make more than you made in the previous week if you get disparity. You don't want to give up on it so far. Right, quick today. Quick session, absolute practice, that's right, you know, cut number one, the world barrier practice. And one make profit. No, so do it whenever I'll do it and get more. Yeah, but don't get cute. Don't think I have a fashion. I've seen the CPI on the German one. No. You know, make sure you know which one. Don't think, well, I fancy this one, have a go at it. And it's the one on the bloody pound of the German, I don't know. You don't get the same whiplash, you don't get the same movement. The US is the one we're after. No problem, Derek. See, it's jumping all over. So if you're out, great. If you're not out, maybe you should get out. And what is going to happen from here, clearly, I have no idea. Nobody does in the world. The market's trying to digest what's happening. If you've got the DXY, I have on my other screen, it's coming off a bit. So I'm expecting some dollar weakness. So I'm expecting some upside on the euro. So don't chase it, don't buy it, it's not a trading idea. But if you're short the euro now, it might be seriously looking at getting out if you can with damage inflation because the dollar is coming off. You liked it then? Good stuff. What's important when making decisions, sir? I need more data now. I'm not quite sure what you mean by that. Sorry about that. Lot size, Mars, a 10K account. I normally go for a risk about 500 to 600 rand per instrument. On this one, I think it's worth going for maybe 700 to 800 rand and work out your volumes accordingly on that figure. Because it can be very profitable and quite frankly, the risks are far more limiting than a normal trade. Okay, yeah, you've really got to be on it. So I was getting rattled there because it's really got to be on it. So it worries me if guys are trying to just pass the driving test and suddenly they want to drive like Lewis Hamilton. No, you got to really be on it, as you heard. Now it's a bit more relaxing. But don't give it up. It can be fantastically profitable. It hasn't exactly been that much of a disaster this time. That's about as bad as it gets. The non-farms was pretty damn good, and I've seen a lot better than that. So, yeah, stick with it. So a little bit of risk with a very, very high return. This is pretty damn good. This kind of method, very popular and done a lot. Okay, we're a bit more relaxed. Have you all got the economic calendar? Have you all got the DXY, the dollar index? Copy, save it, have it minimized, and check it. Don't jump in the euro dollar when the euros or a dollar fundamentals is about to come out. You get caught with your pants down, you might make a quick profit. It's a gamble then. I think next time you I'm going to ask Clemson to do it. Actually, not going to be a big problem because if we start up as 2 next time, all the later arrivals will be in by 3, so that's plenty of time. But it's not just everyone letting in, it's the racket. And you can't hear me and I can't hear myself think. And I have to be clear on what I'm trying to do because guys will come in, get completely the wrong end of the stick and then run away because you just got the wrong end of the stick, basically. You need to be on point and understand it. That's why I want you guys to come to the trading groups because there's too many clients out there trading without having the basic knowledge. And it's not a, well, hopefully it's absolutely obvious that's not the way to go. You shouldn't have to say that. You have to spell that out. It worries me. It should be utterly clearly obvious. You can't be a lawyer and never go to law school. Not going to happen. And it's here. It's free. Come and join us. I'll tell you what I'm going to do in the meantime. I'm going to put my WhatsApp. Please, I get hell of a lot of clients. Don't say, can you give me show me how to trade? I want a one-to-one Zoom. No, I haven't got the time. It's too many people. But guys, you've got 2.5 grand or more and you want to be uploaded to my VIP group, please WhatsApp me with your full details. Not this is George. Full details. So I can check on my screen there. And then if it's the case, I'll send you my details, blah, 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 and upload you. So I'll put that on now. Roger. Trading support. Good question, Anne-Marie. Good question. I see upside, to be honest. I see dollar weakness coming in, backed up by the DXY. I just think it's only 17 minutes old, this. I think a lot of directions seem to be coming about. I'm looking at the buy, but I'm a little bit nervous of going in now. Maybe I'm a chicken here, I don't know. But it still seems to be jumping around. But upside, but remember, I'll tell you what's holding me back, Anne-Marie, is the fact the figure's exactly the same. So I still think the market, like myself, doesn't really know. We want a differential to work on. It is at the moment, clearly, but at the same time, if you copy and paste it, Anifa, I've sent it out to you guys, just let these guys in. Where was I? Okay, where was I? Yeah, it is at the moment, we can jump around. But yeah, I see upside, Anne-Marie. We take a pretty great one to go in now. Which is going to be sustained. I would have said it more clearly if there'd been a disparity in the actual compared to the expected, but it isn't. And I'm not sure the market still really knows which way. It's leaning to the upside, clearly, but it's not that sure. Is it buy or sell for the gold? Question, what's gold doing? Yeah, if you get a bit of weakening in the dollar, might get some upside in gold. We've got a trade idea in gold 1860 anyway, so stick with it. I wouldn't be jumping in now, no, leave it alone. I still think it's a bit early yet to start getting cute. Could drag you in and come off for whatever reason. But in theory, we should get some upside on gold, but I won't be chasing it now. That's not a bad idea, Gladys, yeah. Have it on loudspeaker, yeah. But it's not always like this, you guys, you know. Normally it's a lot quiet and easy going, no panic. When this thing happens, to make your buck, you've got to be quick. You really got to be on it. And you can see, it's not me talking here, you can see, look at that. And I'm looking at DXY at the moment, Anifa, and I'm seeing shot up, shot down, and where the body is, a complete indecision. The market does not know. I would suggest leave it alone. If you miss out, well, I'm sorry about that. But I personally wouldn't try and jump in either side. But now you can see why you need to come to the trading. And remember, I saw Anne-Marie ask the question, I changed my way of explanation because she knows. Now the person asked in, and now 20 minutes later, still not understanding because they haven't got the background. So you need to come to the trading room. It's there, it's free. And believe me, don't go waves and waves and waves of reading material. Get the basics. For goodness sake, get the basics. Otherwise, you won't understand. And then we can develop the strategy. And we talk about fundamentals. We put stuff together and ongoing practice. And you'll find, hopefully, the guys who trade regularly will back me up on this. You'll get better at it. If not, well, then don't bother. I hope you're going to support me, guys, who are regulars here. If you think it's gone backwards since we're in the trading room, tell the guys there. I might lose my job, but I don't want them to lose the money. But I hope the guys have been regular with me, and you're a bit of a master if you keep coming in and it's not doing me favours. So I'm assuming a benefit. But it looks like the gold trade we've got out a couple of days ago might start to come right here. Sorry about the euro dollar, but I was too scared to join it now. It looks like they're leading towards the weaker dollar. It might go up. Having said that, the DXY now starting to go up again. Now, stick with it. If you miss out a lot, rather than. Thank you, Farley. It's nice I can actually teach a chemical engineer a couple of things. Okay, it's getting a bit quieter now. It's down a bit. If you do via Coke, discover it. Can I give you a little tip? Don't sell it. Don't tell anybody about it, not even your loved ones. Just think the money's coming for them because they're happy. Because once some greed takes over, don't care if the loved ones or not. And once they get a hold of that, they'll all send it out to everybody else. And it'll be discounted in the market and it'll become valueless. You know what I mean by that? If I came out 30 years ago, 40 years ago with a smartphone, I wouldn't charge 5,000, 6,000 rand for it. I would charge about a million rand for it, and people would buy it. But once everyone's got it, the price comes down. I'm not exaggerating. That smartphone you got at the moment, you're holding your hand, you know, ones, let's say, got 120 or more gigabytes, etc. Believe me, you could sell that 30, 40 years ago easily for a million rand. We'll take it for granted now. I'll tell you what, Farney, that is not a bad idea. Maybe instead of stock market college, we should say psychological SMC, psychological market college. Okay, because that is really where it's at. Yeah, it's very difficult. FOMO, fear of missing out, very much so. See, it's dodging around still. See what I mean? Yeah, that's right. Maybe we should go into competition stock market college and calls us SMC as well, psychological market college. How's that for an idea? Tell you what, then, yeah. Exciting though, isn't it? Hey, more calm now. But you see, I enjoy what I'm doing. I'm enthusiastic about it, and get carried away, especially when the noise is going on with the ticket going in. So next time, if Clinton's there, maybe Eugenia there, we'll have a look at that for an idea. But let the guys in so I can concentrate. But having said that, I think 2+2 is the right way. Then we got time relaxed to explain it properly. And if we don't, very rarely it's exactly the same. So next time, probably if you start there, then you can benefit from it. Good stuff. Good stuff. Oh, that's good name. Good stuff. So let this guy in here. Absolutely. And remember, anyone who took a loss on that won't be too much compared to the possibility of the upside. You normally go in, you put the stop 100 pips away, maybe 180 pips TP, 100 pips. Yeah, you should have lost more than 30, 40 pips. With the potential 150, 200 pip upside, I kind of like that kind of trade, man. But now I understand, don't bother the stop loss in that. Get in, get rid of the other one, see what happens. And believe you me, if you've got minimized economic counter, you might have a quickly put your mouse on it, quickly check, you see a big disparity. Don't get out too quickly. It's just taking a breather before it's going more in the direct direction. Okay, it's 0.5. Let's say it was 0.1. That's a big difference. So it might go shooting up, right? And then come off a bit. It doesn't matter. Disparity is there. So you can put your stop loss down here. No worries there. Don't get out just yet. Before you go shooting back up again. You're on board, modify your stop, whatever you want to do. And then until it eventually does give up, then you're out. And the reward you get out for the risk is fantastic if you get it right and understand the concept. And you'll start to, because in the trading room, we have quiet times, we get a lot of trade ideas out, quiet times, not much to be seen. Then we can go through this stuff and you can learn. So when it comes to the real thing, you've done it, you understand the concept behind it, and Bob's your uncle. Yeah. Okay, any question, guys? Anyone want to go over? It's a bit more quiet now. I'm not going to jump into the new trades. Don't you think, Clinton? If you see a trade, we'll say discuss, or anybody there see a trade we discuss. It might be the GBP, CHF, or something. I don't know. But I think we'll still need gold and dollar alone for the moment, etc. What's the Nasdaq? Probably jumping around as well now on that subject. Yeah, look at that. Nas jumping around. How much did that Nas jump? This is the 15-minute chart, not a day chart, a weekly chart. Nearly 200 pips. That's within 15 minutes. 200 pips within 15 minutes, guys. You get the idea. I like that, Eugene. A clear sell and a clear buy. So I've got an idea. Anna Marie will buy it and you can sell it. See who wins. Thank you, Anna Marie. It's fun, yeah, yeah, it's fun when it's expected. Trust me, it'll be fabulous fun. We get the discrepancy because you'll go out and think, wow, that's all right. How am I going out for supper at an expensive restaurant? Yeah, don't quit. You can if you want, but suggest you don't. Okay, guys, you've got my number, you're my TR, you've got the, don't forget, by the way, before I shoot off, don't forget, save your charts, save your template. If you lose your charts, it's your own fault because now you know how to save it. Save your charts. If you lose your charts, you quickly go there, templates, and there you are. Pick out the one you like. Don't forget specifications. Click on it. So we'll do it. Right click, left click on specifications. There you'll see your margin, contract size, and all the information you need on it. If you're not sure, then you can go to a class or two. That's what you bought the course for. Go to class or two, interact with your presenters, ask them those questions. Got the basics, come here, and I can refresh that. Are we some newer guys here? I don't know. There's quite a few familiar faces. Just want to go through if any newer guys left. I just want, because a lot of them just left now. I don't quite know why, because the TR is still going on. Exactly. Anyway, if any newer guys there, I'm not sure. I just want to just differentiate between the account manager and the trading support. The account manager is part of FAIS. We have a legal thing in South Africa called FAIS, the Financial Advisory Intermediary Services. Now, I mean, intermediary means you don't have an exam, like that, but you can help a person open an account. You know, you can tell them might be a good course to buy, anything like that. They can do all that. Have a problem with something, I don't know, they can do all that. When it comes to actually giving advice, do we buy or sell this? They can't do it. You've got to go to trading support, which, whether you like it or not, is me. So you've got to go to the bombastic loudmouth pond, whether you like it or not, because you have to be registered with the FSCA, the Financial Service Conduct Authority, to be able to give advice. Okay. And that's why trading is good, because that's where we get the trades, hot off the press, etc. By the time it's posted out to you guys, often a bit late, because, you know, paperwork's got to be done. So come to the TR, learn the basics, and you'll be surprised the exponential speed at which you pick stuff up. I hope you do anyway. If you don't know the basics, you don't know your leverage, know what a derivative is, you know margin is, what leverage trading is, you know what we're talking about, what the spread is of any of that, please come to the trading room. We'll do more classes or both. You must do. Okay. I'm not going to get any more trade ideas too late in it, unless you come out. I'll stop immediately. But I just want to say, you've got to ask yourself, if I say the leverage is 80 to 1, if you don't, you've got to find that out. Okay, you don't want your trading, understand this is speculative, high speed, highly leveraged stuff. And you've got to know you're driving a hell of a speed on it with the leverage. You must know you've got to need free margin in your trade. You've got to know what margin call is. You must know about not overexposing. You must get the volumes right. That's why you get a position size calculator. You get that from the online chat. Okay, when you go onto technical support, and it's not for the shares. Shares like Google, etc., they open at 4:30, and it's a completely different calculator. Go to CFD class, and we'll assist you there. You've got to have these basics, or you're going to get financially hurt. Okay. Okay, never mind. At least you get it, and it's quite exciting stuff. Next time, it's very rare you get exactly the same. Most there's disparity to an expected, like I mentioned a few times now. Then you get a direction. You haven't got direction now, there's no disparity. Then you get a direction. It's a little bit of risk, the immense profit. It's like being a member of the cartel and selling heroin. Apparently, the profit there is horrendous. Well, I'm not sure as much as that. And that's illegal. This is legal. But I'm trying to get it through. The amount of risk for the kind of profit is worth making the effort. Ask anyone who did it last time. It was only last Friday. Quick profit. A lot of guys left now to do other stuff. Big smile on their face. Okay, Fritz, and I'm quite impressed you, I think it was yourself there, made a profit out of it. You're really on it. Well done. Absolutely. See what Tim said there? And shows a need to create a foundation, get the basics first. Absolutely. It defies belief people think they can become a doctor after a 3-day medical course. All right, it's not, you don't have brains of doctors. It's not different as being a professional lawyer, a doctor, a dentist or whatever, but you still, like any skill, you have to have some idea. I know what you do for a living, Tim, but I bet you can't teach me your job in 5 minutes. And if you can, it's probably a very badly paid job. Skill with money means training, unfortunately, it's discipline and a bit of grinding and learning, but it pays off. Okay, cheers, Fanny. Cheers, Fritz. Okay. And also, if you can, depends on the area you live, you do need a decent internet connection. Nothing more frustrating if you haven't found it more northern, you can't because you lose your internet. And if you can afford it, of course, get yourself an inverter. Yes, it is. It is interesting, hey, Teresa? Look at that. Look, this is a 15-minute candle. Look at that compared to these 15-minute candles. Look at that. Yeah, I love it actually. But it's a lot easier. Hey, Eugene, you're still there? Have you left? I think. Oh, yeah, still there, Eugene. I love it when we've got people who come to the training and on the same page, and we can move along. It's very time consuming if people are trying to run before they can walk. You must do. Ask any of the other guys. I've known guys who've been trained for over a year. I had one this morning, and he's just coming in here, and he always picks some stuff up. Yeah. Hopefully entice some people to come in here, not for my sake, for your sake. I guarantee half the problems we're picking up is people are asking questions and making mistakes, losing money, simply because they don't know what they're doing. And it's not difficult. What you're doing is trying to wade through stuff on your own. Come in here and we'll clarify out in 1 or 2, call them forums rather than class. It's like a democratic discussion together. Oh, I didn't know that, didn't I? Well, that's quite easy. I didn't know that. You'd be surprised the progress. I've got people in here who've only been doing it for a month, nearly 2 months, 5 weeks, something like that, and already interacting with trade ideas. That's a good point there, whoever it happens to be. And then, yeah, and some of them have been trading a long time. Talk about the devil, that's one who's just coming in now, actually. Only been doing a short period of time, and he's really on it because he's becoming regularly and taking the trouble. I've had guys say, I do this full time, good idea, and they don't come to the trading room. If you can't apply yourself to your full-time job, you're not going to get paid. Okay, right. No, I personally think the 50s, because look at where the Nasdaq is at the moment. I think other will not quite go. I think it's going to be completely, because it's come out as expected, Farney and Company, it's going to be a bit directionless. What's my view? Well, you're not new to this, you're TR. So what's my view to the non-TR guys, hopefully will become regulars, is sell the rally. We have massive debt out there. I'll give you an example of horrendous debt we've got in the world at the moment. $300 trillion debt worldwide, $100 trillion GDP. So the debt is 3 times our earning. You don't have to be an accountant to realize that it's not a good space to be in. And you'll find you're probably that in your private life. A lot of guys in this country, in America, I think most places, but I know about the 2 of them there, if you put their assets and their debt, you find the debt outweighs the assets. They look good in their BMs and their smart suits and their nice townhouses, but they're all stressed out of hell because all those things I mentioned just there are all on debt. You know, when you get ITC, you get into a panic because you need no assets to debt. The world today, in the last 50, 60 years or so, has been built on debt. The older you ask anybody, ask your grandfather, you don't buy it until you pay enough money. Everybody buys on debt. Business rely on it. You say, well, use rands, 20, 30, 40, 50 grand product. Without debt, you wouldn't be able to sell the product because people don't have 40, 50 K lying around. If you said everything, no more debt, you've got to buy cash. The £1 million house will suddenly float down to about 50 grand like that because everybody buys it on debt. Same with the motor car. The problem is that debt is now getting out of hand, and that's why Powell's trying to fight inflation, trying to bring it down into manageable levels. We think we're bad over here, about 70% debt to GDP. That's good news. You should try the States, about 140% a debt to GDP. It used to be a credit nation, the debtor nation. Try Japan, 250%. They can't increase interest rates like you guys can over here and whatever, and UK and America, because the debt's so high, they cripple them. So they've got to try and export the way out of trouble. The debt is an astronomical problem. And it's getting to the stage where you can't borrow anymore to pay, you know what I mean? So sell the back, putting together reason, sell the rally. I personally think 13,000 is going to hold the Nasdaq for the foreseeable future. So anywhere near the 12.5, 12.6, sell it. If you get close to 13, fair enough. Do not repeat, do not, thanks, Nifa, do not repeat, not do the Nasdaq unless you got the micro. I'll discuss that in a moment. Do not do the Nasdaq if you got less than 5 grand in your account, because you need a 200 pip stop because of the volatility on opening at 4:30. Okay, and you won't have enough money, it'll be margin call. So don't touch it unless you do the Nasdaq. So you've got less than a couple of grand or less than 3 grand or 2 grand or whatever, do the Nasdaq micro. Okay, you should be able to do it on a 501 account. If you've got a 501 account, on a RAND account, you've put in Nasdaq micro in there, quite simple, Nasdaq micro, and you click on it. If you can't, well, go to, I don't know, go to maybe account manager to assist, or go to the platform training, even better, to assist. Platform training is better. Don't embarrass him, he's on here at the moment. A certain Mr. Kruger could do more about IT than he was about 6 months old than I do now. So he's really on it, so he'll help you. Now, I've completely embarrassed him, but he is very good. So he'll assist you if you go to platform training. It gets busy during the day, but go to platform training, take the trouble up to 6 in the evening and get the micro. And the micro, then you can do the NAS on small figures. Okay. Well, that's a good question there, Tim. Very good question. I blame the Fed, Coyote. You see, that's the person I was talking about before you joined. So him doing a month, and he's making statements like that after a month. How many guys have been trained more than a month? He probably do what he's talking about. Join the training room. He's one of my better examples of what can be done. Short period of time. Yeah, blame the Fed. I agree with you. Okay, right. Going back to Tim. Okay, right. I personally think 100 to 1. The problem is, Tim, people don't understand the pros and cons of leverage. There's pros, obviously, but there's cons as well. They don't understand it's dangerous. It's like you've got a Lamborghini. It can do 300 Ks. That's fantastic, not the Lamborghini's fault, but your capability is driving, let's say, 120, and you don't know that. So you get in your car and off you go at 300. Well, you're not a Formula One driver. You've got that expertise, and you're driving fast and your capability is dangerous. So unless you fully understand the pros and cons of leverage, I suggest start off with 1. It'll protect you from being overexposed because you won't have enough margin to go in too big. On a 500 to 1, all that means is a small deposit, which enables you to go into bigger. It's great if it goes well. If it goes against you, your margin could. So you've got a grand in your account, example, you've got a 500 to 1 leverage, and you suddenly go in with 3 micros on the Dow because you can, because the deposit's so small. If you don't know what I'm talking about, go to class and find out. Bang, it opens, comes off, bang, like 100 points, 100 pips. Not in your margin call, you can actually owe the company money, quit the broker money, because you just shot down and knocked you out before it hits your margin. You know what I'm saying? So you've got to have free margin, etc. So it's a forced discipline on a lower leverage account. Worldwide, the talking action, to be honest, are bringing in tighter leverage, especially for beginners, because they don't understand the pros and cons of fast speed driving. So because you can't go into bigger positions, you won't have enough margin. It's a sort of it protecting you from overexposure. So if you don't know the full score, I suggest 100 to 1. Too many guys have this attitude something for nothing, and that's where they're getting caught. They say, I want to have highly leveraged accounts. I haven't got much money. I want to make a quick buck. In the end, they cry because they get margin because they're going in too big. Okay, it goes with you. Hey, hallelujah. Anyone makes big money quickly usually lose it quickly as well because they're overexposed. You got to get your position sizing right. Everybody get the calculator and don't go in without seeing the calculator and getting your budget or volumes correct. Okay. It is the moment it's jumping around, 100, just below 103. jumping around and it's going up. So it's still not sure it's going to go up or down at the moment. It's gaining strength. It could turn around and come off a bit. It's not quite sure what it wants to do. So maybe leave the trades for now. That's why I'm not coming up with trading ideas. Leave the trades for now. We'll have another look when it's settled tomorrow. The big boys out there do not quite sure where it is. They wanted a disparity. Do you understand? If it comes in, if you're expecting 10, it comes in 10, that shoves it. That's not what they want. They want 11, 12, 13, 14, 15, or 9, 8, 7, 6. Then they can get a direction. Trading's all like everything. Life, really. It's about a direction. You know, it's like getting on the bus. The bus doesn't know if it wants to go to Durban or Limpopo, from Joburg, that is. Well, that's no bloody good. You prefer long, but if you go short, if it's bearish or bullish in the good direction, lovely stuff. If it doesn't know it's a bull or a bear, that's the most difficult one. Okay. But these sort of things will pick up. I mean, you only been new here, and you're picking up stuff all in 10 minutes. Can you imagine? More relaxed without the fundamentals suddenly coming in. We're more relaxed, we discuss together in the forum, and we learn from it. Okay. And a lot of guys are coming back regularly. Unless they're adulterated masochists, they must enjoy and benefit, otherwise they wouldn't do it. I mean, if you don't like football, you don't want to go to football every day, clearly. So I'm assuming they're making some value from it. Ken's another one. Yeah. Well, of course it does, because it's an educational program. But SMC won't help if you don't pick up the book. Pick up the book to play golf. How to Play Golf by, say, Tiger Woods. You don't pick the book up and then you get on the driving range, you don't see a pro, and you start hitting the ball and you wonder why it goes all over the place. It's only use if you actually look at it. Problem is, studying's a grind. That's the problem. But unfortunately, it's worth it. And Dr. Gates paid more than a nurse because it went through the grind. The beauty is you don't have to be a great brain box. You have to be a doctor, but not here. But you still have to do something. See, look at it. Now it's coming. The euro dollar. This doesn't seem to know where it wants to go. What's the euro dollar doing now? So it's coming off now. So I don't know if anyone got the short still in, making out. People say go long. Thank you, Anne-Marie. She had to leave. I suggest leaving alone just as well. Didn't know where it wants to go. Go to Pick and Pay and come back. You might be long. Go to Spa and come back. It might continue back down again. What signals influence the NASDAQ? Right. This is what you want people to interact. Okay. The NASDAQ is an indices of 100 tech shares, not entirely to be fair, but mostly tech shares. Okay. The S&P is a 500. It's an index of 500 shares, the biggest there, and there's more than 500 shares in the stock exchange. 5 of the biggest. They cover everything. The Dow Jones is an index of the 30 biggest companies. It could be Coca-Cola, it could be Google. All it's got to have going the 30 biggest company, what we call market cap or market capitalization. Right, how does it work is the point behind your question. Shares, right, if you've got a weak, let's say a weak currency, like we're talking the dollar here, or a weak interest rate, we have something called the 10-year note. It's a US Treasury 10-year note. It's like a bond, if you like. Not interested in the bond itself, runs the interest rate. We call them the yields. The higher the yield and the stronger the dollar, gold and the stock market, not talking about currency now, gold and the stock market are inversely proportional. They'll come off. So if that dollar weakens and the yields or the interest rates come down, then gold and the shares will go up, and vice versa. That's how it's affected. Okay. Have you got that, Tim? So, remember the NASDAQ is 100 shares, like Google and Tesla or whatever, made up that index, okay? And the shares itself, the index, will go up or down in opposite direction to the interest rate and to the dollar strength. Okay, you got that, opposite way around. Now, why is that? Now, I'm a fund manager, Tim, right? And I want to attract funds, people to invest in my fund manager. Now, for me to make you guys happy, My fund has got to give you a decent return. Right. So you've got a choice. You can, there's a risk involved becomes a fund manager. However, what is the alternative? Put your money in the bank and interest rate. Now I'm going to give you an example. Let's say you've got interest rates of, let's say, 1%, just 1%. Your choice is to come to me and take a risk and invest in a fund or put in the bank at 1%. Is 1% a good return? Okay, fair enough. We'll look at it now. Just want to look at it now because that comes first. NZD-CHF. Yeah, what do you should be sideways? You bought it. I wouldn't be buying this one. I wouldn't be buying it. Okay, I think I see why you're buying it, Ken. Seeing a bounce here to go up. I wouldn't have done that. Too tight a range in the sell zone. Every time it breaks up, it comes off. I prefer the Swiss franc to NZD anyway. Plus, we got that, what was it, that hurricane or whatever that happened over there, which is causing a couple of problems. So, no, I wouldn't be long. I'd be short in the break or sell the rally on this one. Still maybe up here somewhere. But if you're in, make sure you've got a decent stop. You're okay. All right, going back to what I was saying, where were we now, Tim? All right, now you've got a choice now. Do you want to put it at 1% or invest in the fund? Clearly, you're going to choose the fund. Okay. However, let's say interests go up. I'm going to be ridiculous now. Let's say go up to 15%. It won't, but I'm just saying to try and make my point clear to everybody. If interest rates are 15%, what does that mean? You're getting a 15% return with no work, no brains, no effort, no risk, all guaranteed. It becomes an attractive choice. So why would you want to invest in the stock market with the risks involved if you get such a high return with no risk? Do you understand what I mean? So if you're getting no return because the interest rates are so low, you've got no choice. You have got a choice, but you're likely to be drifting towards the stock market. If the interest rates suddenly go higher, it makes the stock market less attractive because everyone wants a no-brainer. You understand what I mean? Okay, if you understand that, okay. I'm just like saying, I'll tell you what, I've got a job for you here, Tim. I'm going to pay you 20 grand a month to come and work for me several hours a day, drive to work under pressure, and you're under pressure working. Or I'm going to pay you 25 grand a month to sit in your backside at home. Clearly, you'll choose the latter. Same sort of principle. So if you get money for doing nothing with an interest rate, and it's a very good return, why follow the market? It's because it's giving you no return, money's shoveled into the market. And that's why it's the opposite way around. Hope we got that. I thought that's exactly. I then said euro stronger than USD. Very good question there, Keone. NZD, it's probably at the moment, it's difficult. I say NZD is probably, you get lightweight, middleweight, heavyweight. I say NZD, and you are, I would say, in the middleweight section. The dollar, unfortunately, because of interest rates and the worry about it, is jumping around depending on interest rate increase or lack of, anywhere between the strong, the weak, and the middle zone. So the dollar is very much all over the place for those reasons. So I place a Swiss franc in the strong zone. Used to be the others, but alone in the strong zone. I put in the middle. I put the Aussie dollar. I put the NZD and the euro. And in the weak zone, sorry, the Japanese yen. In the weak zone, what I put in the weak zone, I'm not quite bloody sure now. I've forgotten. Maybe the pound in the weak zone alone on its top. The dollar, it seems to be jumping between. That's the buy, neutral, and slow zone, and the sell zone. Dollar won't seem to be jumping between all three. Because of this interest rate problems with the debt they got out there and the extreme spending policy that they got the incumbent president. He's spending money like bloody water. It's not a problem, it's his money. No, it's not his. I mean, assets money, but it's not. It's borrowed money. It's not your money. It's like you're saying, I'm going to get a credit card and go berserk with it. And then when it run out, it's max you can get another one. And you're looking nice and got all this lovely fridges and God knows what. It's not your money. They're spending, which is not their money. And that's causing the worry. Okay. Going to sell the EuroCAD now. Right. Canadian. Let's have a look at the Canadian and understand the Canadian is pretty similar to the dollar for no other reason. It seems to be foreign for whatever reason. Maybe it's the next door neighbor to a lot of it. I don't see why, because it's got its own economy, it's got a lot of assets, it's an exporter of fuel, which is the black gold, as we say. Which for that reason, it's been a little bit iffy lately. It used to be in the strong zone. Right, what do you want to do with it? I forgot now. Very keen on selling it. I'm not. I want to sell it up here, or preferably up here somewhere. How far away is that? It's only 70 odd pips. Be a little bit patient, 70 pips. If you want to do it now, let's have a look. Stop about the way, 120 pip is your risk. It's quite a lot, eh? Compared to that, what we just done now is 30, 40 pip risk. 120, you've got to take it down here. Yeah, get the risk reward. It's got to take out these guys. It didn't do here, it didn't do here, it didn't do here. So my question is, you can't put a TP there because you won't get a risk reward. Sure what I mean? It's 90 pips. So to do that, you've got to go, your stop loss has got to be here. That's not going to work. Your maths are against you. Unless you take that as a TP, why would you do it? Clinton, you still here if you left? No, he's already left. Okay. Anybody see the sell there? As you quite right, so Eugene, we want to bring people and discuss this. I'm just giving my opinion. I might be wrong. And there, Keone, only doing a couple of months. You see what I mean? He's learning. Guys, Keone can do it, you can do it. I haven't told you he's a genius, but never mind. But yeah, 14365. Yeah, probably would actually, yeah. 14365. I would do it probably maybe 14375. I'd look at it, or better, or higher than that. I'd look at it as long as I get the confirmed move down. Okay, dollar's moving up again now. Leave the damn dollar alone for the moment. It's all over the starting place. Okay, see my point? So I'm with Keone. I'm not sure about that. I'll do my chickens now as well. I'm agreed on that. Cut that one. Let's have a look at the shorter chart. Indecision, all right, it's a bit of a CPI there, to be fair. I know it wasn't a dollar, but similar. It's not getting any legs in either direction. That's not telling me anything. Weekly, it's not telling me much either. I personally think there's not enough ticks on either side to buy, so I'll revalue. Did you be God, Mark? I tell you what, Mark's a right bloody floor crosser. Last week, he couldn't stand the JPY. Now he's fallen in love with it. You floor crosser, you. That's doing okay. I presume, on a serious note, you're knocked out. If you're doing well before, were you knocked out in a nice profit and gone in again? Or dove in again? So that answers the question. Otherwise, you would dive in again. Okay. Right, that's fine. Dollar's strengthening a bit, so you might come right. Yeah, but it doesn't matter. You made a fantastic profit, so that's okay, Mark. Don't forget, guys, modify your stop once in a decent profit. So if the trade goes wrong, you stopped out in a profit. Often in the trading room, guys are stopped out. That's not bad news. It means they made a profit. It's just not great news because they could have made more. Shame. Okay. But yeah, it looks like the dollar's strengthening a bit at the moment. So it seems to be thinking dollar strength. So maybe they're not convinced about interest rates. So maybe get some dollar upside. Yeah. So I don't know what price you got in, but it looks like some upside there. It's going to break above the resistance, but you could be right. Yeah. Well, that's fine. Don't get it too tight. Don't. Fair enough, but don't get it too tight. Eh? Don't get it 15 pips. You're wasting your time. The noise will knock you out. At least a 30, 40 pip stop. Up to you, but I'm suggesting. Yeah, but the body at least is above this, so maybe it'll hold. It's going to break through. What's it doing the fall? It's trying to. Just keep an eye on that. Hey. Okay. Okay, right. Well, I'm only doing 3 to 4:30 today. I'll be doing normal hours tomorrow. Be very careful what you're doing if you're going to do anything new this afternoon. Experience, you know the score fair up, but if you're new to this, be a little bit careful. Rather, just see how the thing settles down, because I say the indicators that came out in the CPI were basically a bit on the directional side. So see how the market digests and react to it, and we'll follow them. Okay. Yeah, he's bringing a bit of Rambo today as well, yeah. Don't forget, this is a Hollywood movie. Rambo will get away with it because the scriptwriter determined whether he's successful or not. In reality, bad guys can sometimes shoot straight. So just be careful of that. You know, when you watch a Rambo or James Bond, at point blank range, you know the baddie's going to miss. Unfortunately, in reality, they're better shots than that. Okay, guys, just approaching 4:30. I hope you all benefited. I hope I got a few converts to the trading room. For your sake as well as mine, but mainly for your sake, because now you see it can be a bit learned. Not always as fast paced as this, don't worry, it's usually a lot slower. Pick up, interact, and it will make a difference. Because I know for a fact, I absolutely guarantee for a fact, there's a guy's trading without having enough knowledge, and it's obviously coming back to bite. And I can see it sometimes. So please come in here. I've only myself, so I can't go individual Zooms. So it's up to you to come in here and yeah, we can progress. Okay. Well, if you're trying Eugene, and then we'll have a look in tomorrow and see if you came right. I had the GBP CHF today at 1.1151 for a sell. I wrote it down for fun because nobody wanted to take it. Let's see how it worked out. GBP CHF 1.1151. See it working out. So we think just as well you didn't take it or what? 1151 for a sell. Oh, that was a fundamental. Now it's 40 pips in the wrong side. So just as well you guys didn't take it. There we are. In fact, you would have been happy because you probably had a stop up here somewhere as well. It went right up here. What are we on the 1 hour? Right up here. So yeah, just as well you didn't take it. And do you see what I mean? It's even affected. It's got nothing to do with the dollar. See how it affects the world. It affected this one as well. Just shows how it affects the world, the US. That's fine. 30 pips is fine, Mark. 100%. Perfect. So remember that, guys. Don't have 10 pips stop. Might as well just take your profit. You're wasting your time. The noise will knock you out. Noise is the up and down. And always remember, there's millions of people trading, different money, different emotions, different strategies, different everything. And you're always going to get the noise. The ups and downs of the noise. Okay, we all good? Hope we got some converts to come back. We'll be doing the CPI again. We'll do the non-farms again. Maybe start a little bit earlier, something like that for later arrivals to get the mechanics of the trade right. And then we'll take it from there. Okay, catch you tomorrow morning. Okay, guys? Cheers. Cheers, everybody. Hope you enjoyed. Hope you benefit. That's the main thing. And you put up with my loudness. It's not always like that. Cheers. Cheers, Pete.